It's Brian Preston, the money guy.
Because this came up at that retirement meeting. Loans.
Oh, yeah.
401ks. Now, once again, cautionary tale. We don't like it. You made a joke about it during your presentation, but you said every time I talk about a loan, I'm going to tell you guys, don't do it. But if you get in a pickle of a situation, you at least have options.
Right.
It is one of those things where if you're in a 401k, a 403b, there's a very good chance you might have access to a loan. So if you got in a situation where you needed access to retirement assets, you lease with a loan. Here's the cool thing over IRAs. Everything I gave you on that exceptions list was to avoid penalties.
Right.
But as soon as you pulled that money out, you were paying income taxes as well. So you were gutting probably 25 to 30% of the assets if you add the state plus your federal income taxes. That's sad because that money will never work for you again. However, with a 401k, we don't love it, but you can take a loan, probably pay it back over a 5-year period, and guess who is you're paying interest on that amount. There's usually an interest rate that is calculated by your plan administrator, but guess who that interest rate is being paid to?
Well, it's got to be the IRS, right? That's who takes from the IRA, right,
That's
Brian?
what's so cool. You actually are paying yourself back, and no income taxes are due on the loan until or unless you separate from service before you've actually paid the money back. So we don't like seeing loans, but I think it's a much more viable option than going and yanking money out of IRAs and paying income taxes that you'll never get back.
So I want to make sure I understood that right, Brian. So there was an example earlier. You said if we needed to get $10,000 out of an IRA to cover the taxes and penalty, we actually have to pull out maybe $15,000.
Yeah, getting close to $16,000.
And that extra 5 or 6 just disappears.
Yeah.
With a 401k, if we need $10,000 and our account balance is at least 20 because you're limited to how much you can borrow, I can actually just pull out that 10 and I get to pay myself back so it gets back in the account.
Yeah, and that is truly a much better thing because you didn't have to pull that 5 for the penalties and interest. But I do want to, the bad thing is there is an opportunity cost, a big opportunity cost, because that $10,000 that you pulled out, yes, it's great you didn't have to pull $15,000 to $16,000 out, but that 10 is no longer working like it was, because when you are paying back that interest rate, that's money that could have been potentially doing better with the S&P 500 or a good balance or diversified mutual fund strategy.
Yep.
So that's the thing, just to keep that in mind. But it's definitely better to have that money working for you instead of pulling out an extra 50 to 60%
Sure.
just to pay taxes and penalties.